through applying some basic technical analysis to the price of gold, it looks like it is going to absolutely surge, and today I'm going to share that with you. How's it going, guys? Ryan here and welcome back to another investing video, and today we are talking about the price of gold, and I'm going to share with you some basic technical analysis that you can use not only with the price of gold but for any form of commodity, any form of stock, in order to predict the price trend. And from what it looks like, gold is going to absolutely surge in the near future. But before we get into that, guys, please remember to give this video a thumbs up. It helps me out so much with the YouTube algorithm, and subscribe for more investing, stock market and wealth management content. I'd love to know if you applied these same techniques that we share in today's video in the comments section below. And with that, guys, let's get straight into today's video. If we look back to last year, we can see that the price of gold in 2020 hit an all-time high, surging to over $2,067, which is absolutely insane. That is US dollars, and it looks like we are once again going to see another surge as the price has finally been able to pull back, and it looks like it's going to go again. Now, how do I know this? Well, I'm going to share with you exactly the technique that I've used in technical analysis terms in order to predict the price of gold surging in the future. So let's jump into the computer and I'll show you exactly how I've done that. So welcome into my computer and into a website called tradingview.com. If you have been on my channel before, you'd see this is a tool I use on a regular basis in order to show you how to perform different types of technical analysis and predict price trends. The beauty of it is it's absolutely free. And I'd like to point out I have absolutely no affiliation with this company. I just think it is an awesome tool. So if you go to this website or another one that's similar, simply go to the top and type in gold. And what we're looking for is the US dollar versus an ounce of gold, effectively the gold price. What we do then is go to our full featured chart here. Once this one loads up, we can see the previous history of the price of gold. And effectively what we are seeing here is an uptrend over the long term. That is quite obvious looking at it. Obviously, we've had our ups and our downs, but you can see from about October in 2018, we have had a relatively steady increase in the price of gold. And we can see up here, as I mentioned previously, it peaked, closing at $2,067 or just slightly over, which is an absolutely crazy amount. And this point right here is when COVID-19 came into effect. So using some basic technical analysis called price trends, how can we actually predict the price? Well, first of all, what you want to do is grab your line tool. And if we're talking price trends, you're going to be talking either an uptrend, a downtrend, or a sideways trend. And what you want to do is take the lowest point on your chart in the relative future. Sorry for all these notifications. It's a free program, as I mentioned. And what you want to do is effectively select those locations. So here's relatively my lowest point in recent history from what I can see on the chart. And we're going long term here. And what I'm doing is dragging this across. And what we want to see is effectively the price touching various points on that line. And what we actually can see here is lots of times has this line been touched. This is our trend line, it's the bottom. And due to it being the bottom, it is known as our support line. And what we can see is a clear uptrend from this point in May of 2019 and the continued rise. If we kept going back, you can see it would actually continue as well back to into 2018, but just for ease of visual, we will use from this point. Now, going forward, what can we see? Okay, the price is clearly trending upwards. It's bounced off this line multiple times, hit its peak, and it's coming down again now. And what we can see is once again, it has hit that line, that point at which it is being supported in this uptrend. It's bounced off it. So what does this mean? Well, two things could have occurred here. Either one, it would have broken through this line and continued downwards, or And what it has done, it has bounced off it, indicating that it is going now in an upwards direction. And effectively what this means is the price of gold is continuing in its uptrend. Now, what you can do as well is take the most recent high and do a similar activity at the top. And this is effectively going to be our resistance point. So about here's where we should be looking. And what you can see is the price has tipped just there and it's hit this line at the top. I mean, if you want to be really pedantic, I suppose you could go like that and, you know, elevate it a bit, but I like using the top when I'm talking trend lines. So if we take the top, what we can see is a triangle is forming, and we can see the price is actually going to fluctuate between this support line here and this resistance line here. Sorry, other way around, this support line and this resistance line here in an uptrending manner. So taking a closer look, what does this mean? Well, first and foremost, the price is bouncing off this line and it is going upwards. So we can see it is heading likely in this direction right here and going to continue. And what we're expecting to see then is effectively a line is going to occur, and we're going to see the price go this direction and it's going to hit this point. Now, two situations can occur when it hits this point. Either A, it is going to break through this line, break out into a new uptrend, and what we're going to see is the previous highs are going to be tested at this point right here. And hopefully what we'd see is it hits that exact point and continues upwards in this sort of direction, as you can see by these arrows that I'm drawing right here. Now, what is the second option? Well, the second option is that effectively it bounces off this point here and goes downwards. So let me grab another tool here. So it could bounce off this resistance line and go downwards. But what's going to occur? Well, it's going to keep consolidating in this manner until it gets to a point where it decides what direction it is going to go. But how can I make the determination that it's going to break this top resistance line and go upwards instead of breaking this bottom support line? Well, it's quite simple. That is due to the fact that we are in a long-term uptrend, and we can see what has occurred is that we've just had a bounce off this support line, which is a confirmation of the strength and a confirmation of the trend. So what I'm expecting to see is situation number one, and the price is going to surge upwards. And hopefully what we see as well with that is a large volume and a large candle to support that. And what we want to see is not just the price exceeding this line here, we want to see it close above this line. And effectively that will mean that we have broken out into a further uptrend after we've had our confirmation. If not, it'll continue to consolidate and likely still occur, but just a bit further down the track. Using this simple technical analysis technique has enabled us to predict the likely direction of the price of gold. If we see that top resistance line broken, we are going to see a new breakout, and it will once again retest the recent all-time highs when it hit 2067 US dollars. If it can then break through that point once again, then we are likely to see new all-time highs and hopefully close at that point. Obviously that's a bit further in the future, but what does this mean for you as an investor? Well, it means it's time to get set, whether that be in gold as a commodity itself or investing in gold stocks or anything else gold related. Due to the value of gold likely being to surge as a result of the current trend being followed, we are going to see obviously an increase in anything that's associated to gold. So whether it be you have gold bars or you have a gold producing stock in your portfolio, it is likely to increase in value. The beauty of this technical analysis technique is it is very simple to understand, and if you take a long-term perspective with a lot of historical data on a chart to back it up, you are more likely to be successful in predicting price trends than you are not. I highly recommend that you look more into the trends and how a chart operates in that perspective with regards to price action when you're looking at other stocks, other commodities, all that sort of thing before you invest in a company. what it enables you to do is not only predict the price trend, but it also enables you to pick a suitable entry and exit point if you're applying it to stocks or to commodities, for instance. That wraps up today's video, guys. I hope you did enjoy it and I hope you found some value of it. I'd love to know your thoughts on this technique as well as the price of gold in the comments section below. And if you did enjoy today's video, please remember to give it a thumbs up and subscribe for more investing, stock market and wealth management content. And with that, guys, I hope you have an awesome day. I'll see you next time. Cheers.